Your roadmap to the latest in auto? Welcome to Highway Herald. The EV revolution seemed unstoppable until it wasn't. Now, BMW, a brand once hailed as a pioneer in electric vehicles, finds itself grappling with sluggish demand and fierce competition. BMW's early leap into EVs positioned it as a trailblazer, but now the automaker faces multiple setbacks. Surging Chinese rivals, dwindling EV incentives, and wavering demand have created a perfect storm, leaving BMW questioning the future of its electric lineup. Even its CEO is voicing doubts about the EU's ambitious goal to ban combustion engines by 2035. Today, we're diving into the 7 key reasons BMW's EV journey has hit the brakes. Reason number 7, declining demand across Europe. Despite a 35% year-over-year increase in BMW's EV sales, with nearly 15,000 units sold this July, the numbers reflect a deeper challenge. EVs still make up only a small portion of BMW's total sales, which exceeds 700,000 units annually across Europe. While summer sales data looked promising, recent figures show a concerning trend. Europe's EV market has dipped by 6% year-over-year. The impact is especially stark in Germany, where ending government subsidies led to a sharp 35% decline in EV sales. With fewer incentives, demand has cooled, and skepticism is growing around the EU's ambitious 2035 combustion engine ban. This shift underscores concerns over the viability of Europe's rapid EV push, hinting that the transition may require a more balanced approach to succeed. Reason number 6, slipping sales in China. The Chinese market, massive, essential, and now a serious challenge for BMW. BMW's foothold in China has been solid for decades, but 2024 has presented new hurdles. In the year's first half, BMW managed to sell over 376,000 vehicles, a slight dip of 4.3%. However, the situation took a drastic turn from July to September when BMW's Chinese sales nosedived 30% year-over-year. It's not for lack of trying either. BMW's all-electric X1, the iX1, and a China-exclusive electric 3 Series, the i3, are notable entries. But most of BMW's success still hinges on its combustion models. BMW attributes its struggles to China's challenging environment, which translates to formidable domestic competition that's more affordable and increasingly sophisticated. Legacy brands like Mercedes-Benz also report declines, indicating that China's EV market is evolving fast, and European automakers are struggling to keep up. Reason number 5, image crisis. BMW's struggle to stand out in the EV market. In a maturing EV market, BMW is facing an image problem that's casting a shadow over its luxury status. Known for its blend of performance and prestige, BMW's EV lineup hasn't captured the imagination of enthusiasts or green-minded consumers in the way Tesla's has. Surveys reveal that many potential buyers see BMW's EVs as lagging in innovation. Models like the iX1 and iX3 are arriving slower than expected. And even when they do, they haven't had the wow factor that buyers look for in a premium brand. To compound the issue, controversies around BMW's battery sourcing and the environmental impact of its production have raised red flags. For BMW to reclaim its position in the EV sector, it'll need to ramp up its production speed and create a clear, inspiring EV narrative that resonates with buyers who associate BMW with power and sophistication. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now let's explore reason number 4, facing off against Chinese competition. China's influence in Europe's EV market has become impossible to ignore. Chinese automakers have increased their EV market share in Europe from a mere 3.5% in 2020 to 25% today. Chinese EVs are often cheaper and more advanced than many of their European counterparts, which has triggered new tariffs on Chinese imports, ranging from 17% to 45%, as European regulators attempt to shield domestic automakers. Yet this tariff decision is a double-edged sword for BMW. On one hand, it could protect BMW from the wave of lower-priced Chinese vehicles flooding Europe. On the other, China's anticipated retaliation could harm BMW's own ambitions in its crucial Chinese market. These tariffs also inadvertently help BMW's lobbying efforts to delay the EU's 2035 combustion ban, which we'll delve into shortly. But first, let's dive into one of BMW's major hurdles with electrification. Reason number 3, battery supply challenges. The tension between China and the European Union has spotlighted a serious issue: BMW's reliance on Chinese-manufactured batteries, primarily from CATL, a major supplier. Like many automakers, BMW depends heavily on critical materials sourced from China. Given that China controls most of the global supply of rare earth minerals and other essential EV components, this reliance leaves BMW vulnerable. BMW CEO Oliver Zipse has voiced concerns, noting that such dependence could pose a severe risk to the European auto industry, particularly if economic or geopolitical conflicts intensify. European authorities see new tariffs as a means to push automakers toward diversifying their supply chains. However, this solution is largely long-term, while BMW needs a more immediate way to cut production costs and make the EV shift sustainable. This reliance on China illustrates a larger trend impacting all of Europe's automotive giants: a geopolitical race for EV dominance, where strategies and alliances will play a defining role in market success. Reason number 2. Questioning the 2035 ban on combustion engines. The European Union's ambitious goal to ban combustion engine vehicles by 2035 was set during the early days of EV adoption, when excitement about electric technology was high. However, recent market data has tempered that optimism, and BMW, among other automakers, is raising serious concerns. CEO Zipse argues that this transition is occurring too quickly, particularly given the lagging infrastructure, insufficient battery production, and stiff competition from affordable Chinese EVs. The company relies heavily on its gasoline and diesel-powered models, which still account for most of its sales. Moving to an all-EV lineup within the next decade would challenge BMW's profitability and likely increase its dependency on Chinese battery technology, a concern for both BMW and the European automotive industry as a whole. Without significant subsidies or advancements in charging infrastructure, the 2035 ban may be both unrealistic and potentially damaging, Zipse warns. Reason number 1. The promise of hydrogen. Amid these challenges, BMW is exploring hydrogen as an alternative to pure electrification. CEO Zipse and other industry leaders, including Akio Toyoda, believe the limitations of battery electric vehicles make hydrogen a promising long-term solution. Hydrogen fuel cells could help address key issues, including battery production scalability and infrastructure. Unlike EVs, hydrogen technology relies less on rare earth materials, which could lessen BMW's reliance on China and stabilize supply chains. BMW has already started rolling out hydrogen-powered models, such as a hydrogen fuel variant of the X5 crossover, viewing it as part of a multi-fuel strategy. Zipse envisions hydrogen technology as a substantial market player by 2040, providing an option for consumers who prioritize quick refueling times over extended EV charging periods. The company's focus on hydrogen reflects BMW's commitment to a diversified approach, advocating for coexistence among multiple energy solutions rather than over-reliance on a single technology. The road ahead, a crossroads for BMW. BMW faces immense challenges as it navigates the rapidly shifting automotive landscape. With Chinese competition rising, dependence on foreign materials growing, and questions surrounding the 2035 combustion ban looming, BMW is at a pivotal moment. The company's exploration of hydrogen represents a possible path forward, emphasizing the need for innovation and adaptability. The stakes have never been higher, and BMW must act decisively to retain its status as an industry leader. So, what do you think? Will BMW's diversification strategy pay off, or is the company taking on too many challenges at once? We'd love to hear your thoughts and experiences with BMW's EVs or hydrogen tech in the comments below. Thanks for watching, and don't forget to subscribe to Highway Herald to stay updated with all things automotive. See you next time.